16 of my trade recap videos. It's the 6th of February 2026, and yeah, it's Friday. We're coming to a weekly close, so it was kind of hard. There were multiple ideas you could have traded right here, but overall it was pretty hard to decide. So coming to the daily candle, we had a continuation signature lower, so there was a chance to hit these lows right here, this low right here. But when I came to the charts, we have actually already taken out this low, so I kind of had to decide if we want to drop lower right here or if we want to retrace in terms of the weekly close to pull back a little into that range. So what I did to form my bias here is I wanted to see if we have any lower time frame cracks, so in the 4 hourly, 1 hourly, 15 minute, but unfortunately we didn't have any SSMT, so it was kind of unsure what we want to do right here, if we want to go lower or reverse. Also, if you look at the daily profile, Asia expanded, London expanded, so here kind of have to think about if you want to drop lower here. Would have made sense if we had any SSMT right here, or if you want to go and take this initial 4-hour gap. So we had kind of multiple scenarios, and it was really kind of hard to tell what you want to do. Also, we didn't have any SSMT, so we have to adapt, and I went to the 5-minute chart, to the 90-minute cycle, and let's mark out some things right here. So this is when I went to the charts, and this is the market open, and yeah, prior to market open we had actually a bearish SSMT, so disregard this bullish SSMT. We had a bearish 90-minute cycle SSMT right here with the TCIST. So I was kind of thinking that this could be the reversal to drop lower actually. And also right at the 1 hour we had the gap below us, which also would have been a perfect drawn liquidity right here. So everything kind of makes sense on the lower time frames, but not on the higher time frames. But still, the idea was there. 5-minute TCIST, and then on the 1 minute, right at market open, let me see, you see right at market open, now watch closely to YM. Right at market open we had another micro SSMT right here, so between Q1 and Q2 we had the Q1 highs, right here, and on Q2 we didn't went actually above these right here. So what is this fucking gap right here? So yeah, and if you look at this, in this case YM started dripping higher. So we had for a short time we had this micro bearish SSMT. Everything failed later, but just from looking right here at this point, we had a bearish 90-minute and a bearish micro with a TCIST on both time frames. Plus we had the 1 hourly gap below us. So this was another confirmation. I entered right here, or like one candle before, at the TCIST, stops on this high, and I target the 1 hourly gap. And in theory this was really a great trade. I really catched it well, and I put in all my confluences I have for this, and in practically everything really went wrong. You know, I'm trading on the iPad. I have split screen, so only a small screen where I have my trader weight and my DOM. Also, I didn't use a mouse for today, so the problem was I couldn't set my take profit right here in time, and I couldn't get out because it was kind of lagging on the website. So we hit the target and then reversed straight at 9:30, and I couldn't have even set my stop loss too. So I just hit the daily loss limit, which is pretty unfortunate. I could have made 1.5k. So in my head I have a 1.5k, but in real I have minus 1k. So a bit unfortunate, even though my idea of the trade played out. Overall, something else to mention, we actually just really tapped into that 1 hourly gap and then went higher. So it was really not a great day for analyzing. It was not the cleanest price action. We were chopping around a little too, and yeah, we don't have any high time frame SSMT to confirm the direction. This is probably something I also want to avoid trading when there is no high time frame SSMT, because overall I don't only want to get the trade right, I also want to get the bias right to really get confirmation and not that kind of gambling attitude. Now I'm gonna show you a few ways, 2 or 3 setups you could have actually taken in this order direction. So 3 longs you could have taken. So first of all, could have taken the 90-minute cycle into the 1 hourly gap, then go higher. Here you could have taken the inversions of these small gaps right here, something like that, or also a retest, which I think it was actually a SSMT fill of this 1 hour gap, 1 minute gap. So you could have, as you see, the TCSD wasn't retested, but we confirmed it, and then what you can do is just the first gap after the SSMT, wait for a retest and take this, something like this, and stops either on the bottom of the gap, or I mean this wouldn't have worked out, but because we actually already expanded higher, so this was not a good stop loss. And maybe something like this, target this 4 hour high right here, so this 4 hour gap above. And also this was a kind of protected low, because we had the 5 minute candle, and this was where are we? This was just the open low of the 5 minute gap. You see we had the continuation signature, so we waited for the open low, we got the 1 minute CRT, we rebalanced this candle about 50% of the body, and then we went higher. So this could have been a trade right here. Another thing you can do is like the discretionary model. You wait for a reaction from the 1 hourly or the 4 hourly. You wait for the expansion, and then you wait for a reaction into a 5 minute or a 15 minute gap. So same, but on the lower time frame. And as you can see, we got this reaction right here on the 5 minute. So we tapped into the gap right here again, and from there you just wait for any inversion on the 1 minute or even on this 30 seconds. So let's mark that out real quick. This is just an idea of what you could have traded right here. So nothing I would trade, but if you want to think about anything. So right here we wait, we tap in the 5 minute gap after reacting from the 1 hour gap, and then we just wait for an inversion of this gap right here, a 1 minute gap, 30 second gap, or even 3 minute gap. We got inversion right here, we got a retest, and from there you could have also taken the trade stops probably on this low, and yeah, just target something like 2 or actually you could have targeted the opposing liquidity right here, or any higher time frame gap if you go back and look at it. So maybe this 5-minute gap or something like that. But you see, it's a bit choppy. I'm just giving examples of what you could have traded. So yeah, but overall I'm kind of satisfied with the trade, but it was overall a hard day, and I was very, very, very tilted because of the execution on the iPad. And yeah, also overall it was a hard day, not clear, not really clear. There was it would have made sense to go lower, but it also would have made sense to go higher. And if you look at the weekly candle to close this video right here, we mark out the bottom and the high of the weekly candle, and we were right here, and we want to go back and kind of retrace a little bit, and it was perfectly happening right here. That's it. Let's write down the profit or the loss right here. So minus 1.1k and $63 right here. See you in the next one next week on the Monday. Start again. And also I want to mention this was only on an EVEL, so not on my funded, which I passed yesterday. So everything is fine, and see you in the next one.